Take us through your checklist as to, whether this phase of the rally is on solid footing and what you make of the recent breadth expansion.
Yeah, well, we were getting a little uncomfortable with the market at the early part of July. We knew that the seasonal trends were still very, very strong. So that was, keeping us in the game, if you will. But as you get towards the end of July, the seasonals tend to peak. And that's the point at which, we were going to look to exit unless we saw some type of notable improvement in breadth and participation. And we got that on Thursday. In fact, Thursday's advance was the fourth largest outperformance of the Russell 2000 versus the Russell 1000 in the history of the data, which goes back to 1979. So it was pretty meaningful. And that's exactly what you want to see. Now, Thursday was at the expense of the Russell 1000, but clearly we've seen improvement since then. So, when we look at 20-day highs and some of these other indications of breadth, they're not as good as they were back in December, and I wouldn't expect that at this point in the rally, but they were well above 40%, and that's a pretty good number that has some sustainability to it historically.
I noted your work there about that, greatest outperformance or breadth expansion last week in history. And now some of the other similar dates, though, were all around major market lows, right? It was like when you're coming out of a real washout. Does that change the calculus, or how does that work here?
Yeah, I think you have to put an asterisk by it because clearly we're not in a big oversold condition. We don't have the same amount of volatility that we had. It was those three other dates, by the way, were the lows close to 87, the lows close to 08, and the lows close to COVID in 2020. So clearly a much different environment than we were there. But, we did the work on this, and it historically is bullish for the S&P out 1 in 6 months. It's actually pretty bullish for cyclicality versus defensive, which is what you'd want to see as well. It's a very good indication short term for the Russell 2, but what's interesting is that outperformance tends to fade after about 3 months. So, I do think that we've got this window of opportunity for the small cap names here. I don't know how durable it'll be. If you look at history, it's going to be good for about 3 months, and then you might as well just be a market participant at that point. But, when we look at even some of the other dates around that weren't those meaningful lows, we had one actually after the 2016 election that was very similar to that, and they proved to be bullish as well.
Yeah, they certainly seem to have a little bit of life to them. I know you had been looking, for months now, really, for yields to have peaked, and obviously they've sort of rolled over at this point. Where does that project down to, let's say, on the 10-year?
Yeah, I think it's good news. We have to get through this 420 level, and I haven't looked at it in the last hour or so we'll see if we're through that. But getting through 420 then takes you down to 403. Getting through 403, which I think we will do, takes you down to about 380. So as long as that trajectory is to the downside, now we're already seeing it in short rates. I think that's important. So we're seeing a little bit of a steepening of the curve. Short rates can take us down to 4% pretty easily. But all the things that we'd expect to see when we see short rates declining, a pickup in REITs as an example, all those are good signs. In fact, one of the most consistent asset classes is small cap when you get the short rates to come in. So all these things are kind of fitting together with this peak in yields. It took, probably 3 months longer than we were hoping it would to kind of stall out and roll back over. But I think the inflation prints that we've seen and what we're getting from the Fed now is pretty clear that we're going to be on this trajectory of at least stable to lower rates on particularly the short end of the curve. That should feed into the back end of the curve. I just